The last time we covered Marvell stock, I warned that MRVL was extremely stretched from its moving averages and eventually something had to give. Since then, Marvell ran to nearly $330 before crashing all the way down to $162, a drop of more than 50%. Now MRVL is back around $211 and we may have a falling wedge that could eventually target us back above $300. But first, the bulls have to break the $235 to $242 resistance zone. If they fail and we lose $197, we could be looking at $180 or even $160 again. Let's break down the levels that could decide Marvell's next major move. And we're going to start off here with the monthly chart. And right now the price of Marvell is at $212.24. Now the last time I made a video was on June 4th. And I was speaking about how we were really extended away from this 21 moving average. We had about 4 green months in a row. So I knew that we would have to eventually either come down or come sideways and wait for the 21 moving average to catch up. As I said before, we fell all the way down to $163 basically. Big red engulfing candle for July. Now August, we're starting to come up a little bit. We still have 20 days before this candle closes, but we're still far from the 21 moving average, which is at $114. We can see here that the stochastics RSI are starting to roll over. There's a long way down before coming all the way down and resetting. So I would think that right now we're kind of in a consolidation mode. We went up rather quickly. It's time to go a little bit sideways, wait for the 21 moving average to catch up to price, and then from there we could either continue to go up or possibly come down. Now for the weekly time frame, this one's looking a little bit better. The stochastics are starting to reset here, but there's still no indication that they're starting to point up. Now what I'm liking here is that ever since I made that video, we did have about 4 or 5 weeks of red candles, but we were able to basically bounce back up above the 21 moving average, which is at $197. We want to hold this. If we end up losing 197, we could start falling down towards this 50 moving average, which is at $131. Now this is kind of looking to me like a possible falling wedge here, and if this is the case, this could possibly break us back out to about $313. As you can see, we are already started breaking out, but to confirm this, we have to stay above the 21 moving average and continue to go up. Stochastics RSI are kind of in our favor. We head over to the 3-day chart. Stochastics again are low. We're starting to point up. We're trying to hold above the 50 line here on the RSI, but the problem is that once we lost this 21 moving average, we haven't been able to get back above it, and right now we're getting a red candle and we still have about a day before this candle closes. This is going to be the gateway right here, which is at $235, this 21 moving average. If we could get above this 21 moving average, then we could start working on that falling wedge on the weekly to start breaking out and start targeting higher levels. But if we get rejected off of the 21 moving average again, we have a gap here in the VRVP. This looks like we could fall back down towards this 50 moving average, which is basically at $160. Now on the daily time frame, the stochastics here are toppy. We are above the 200 and above the 21 moving average, but we have not been able to reclaim the 50 moving average at $240. Let's see if we can stay above this 21 moving average. If not, we could fall back down to this 200 moving average at 140. Again, we have a gap here in the VRVP and we're stuck in between it. If we could get back above this 50 moving average, we could get up as high as 260, probably even back to this point of control at 285. Stochastics here are not in our favor though. At the end of the 4-hour time frame, stochastics again are rolling over. I'm starting to see some curvature. It's possible that maybe we roll back up. I'm liking that we kind of did a weird double bottom here. We're kind of flagging out sideways. We are above the 21 and the 200 moving average, so that's slightly bullish for the short term, but we have not been able to surpass this 80 moving average or this 100 moving average, basically at $240. So unless we could do that, we're still either going to go sideways or possibly have more downside. On the 1-hour time frame, we are starting to get some bullish divergence here on the stochastics RSI. We're starting to point up. The RSI is starting to get back above the 50 line, and we did get this big red engulfing candle here that was very bearish. Ever since then, we lost the 21 and the 200, but we're starting to kind of reclaim it now. Again, right here is the point of control, basically at around $220. We would have to get back above this candle here, which the high was $230 in order to continue to be bullish. So right now the levels is we need to get back above $240, hold that. If we could hold that, we could start making our way back up, possibly even to $300 or more. But if we lose that $197 level, I could see us coming back down to 180, possibly testing 160 again, and worst case scenario, even falling down to 140 or 130. So right now I gotta say that I'm a little bit neutral to bearish on the Marvell stock. Let's see if we could reclaim those major levels in order to get bullish bullish again. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the move. Catch you on the next chart.